Hey guys, SGT here. Just a quick note. This conversation with Alasdair Macleod ran nearly an hour, so I'm breaking it into two parts. The first half is about dead banksters who tell no tales and China's 30,000 tons of gold. And in 48 hours, I'll release the second half of the interview, which is about the Swiss gold referendum and much more. Thanks for listening. All right, fellas, I tell you what, instead of making our pleasantries and just catching up right now, let's just do it essentially live. I'll hit the record button here because, oh my God, Alasdair, I had a list of things I wanted to talk to you about, and then I woke up this morning and there's new news.
What's that?
I'll tell you. All right, here we go.
Okay, all right. I'll look forward to it.
All right, ladies and gentlemen, thanks for joining us. This is Sean from SGT Report, and on the line right now, I have my daily contributor, Rory, and our good friend, Alasdair Macleod from financeandeconomics.org and goldmoney.com. First, let's say hi to Rory. How are you, sir?
I'm doing well. I hope you are.
Yeah, I am. Long time no talk. I'm glad that you're able to join us today because we have one of our favorite guests on, mainly because he has such a charming English accent and he's smart. Alasdair, how are you?
I'm very well, thank you, and I hope you are too.
Well,
I have to say, I don't get chased by the girls round here. Perhaps I better come round to America.
Yes, girls in America swoon over you Brits, over the accent.
I'll be over on the next plane.
It's funny, if you watch any American TV and you listen to any of the interviews with the main actors, so many of them are either Australian or English. It seems there are no American actors that are castable in shows anymore. All the leads are either Australians or Brits.
Really?
Yes, but sporting American accents, usually. Yeah. That's the funny part.
Yes. Sort of mid-Atlantic, I think we call it.
I got to tell you guys, so I was preparing for this last night by sort of documenting the collapse as we've done in the past with all of the hot headlines I want to cover, and I want to read some of those. But the first one I want to read, because it leads right directly into the second two, I think, most important ones, is this one from Zero Hedge, in which Putin says the U.S. dollar is losing trust as reserve currency. A world without rules is a possibility. Anarchy growing. When we talk about the dollar collapse, we talk about documenting the collapse. These are the things we're talking about. Even though gold has been suppressed and silver prices have been suppressed, what's going on behind the scenes is the story of the century. And there's absolute panic, I think, breaking out all over the world. And why do I say that? Well, the second headline I wanted to read was this one. Banker suicides return. Dominique Strauss-Kahn's hedge fund partner, Thierry Line, I'm not sure if I'm saying that right, Alasdair. I'm not sure how to pronounce his name, but he apparently jumped from the 23rd floor of his luxury apartment. Now, I said in the comments section at SGT Report, as people were speculating on whether or not this was wet work, who would choose to jump to their death? And I said, oh yeah, J.P. Morgan's Gabriel McGee. Do you remember when he reportedly jumped off the headquarters of J.P. Morgan?
Yeah, that wasn't so long ago. I mean, there's been a rash of these. The trouble really is I don't know whether, they're all being reported. I mean, when you think, I don't know how many bankers there are, 25,000, 50,000, whatever, you're going to get some who are sufficiently depressed to kill themselves. That's right, I shouldn't laugh. It's actually quite a serious subject. But, so we don't really have any sort of comparison. But now, of course, we're all sort of latching onto it because we know that there are lots of stresses in the system. And I just imagine if I was working for one of these major banks with all the stresses in the system, I don't think I'd be a very happy employee. And some of these people must be under enormous stress.
Absolutely, and the reason I wanted to bring that up and actually slide that banker suicides headline to the top of my list, because previously I was going to hit it number 4, is because this morning there's another one. And apparently this happened on October 20th, but it's being reported on today. A Deutsche Bank lawyer and former SEC enforcement attorney found dead in apparent suicide. And this is Charlie Gambino, a 41-year-old general counselor for Deutsche Bank. And I do want to read this section from Zero Hedge to you fellas because this is really breaking news. It's really important. Zero Hedge notes, it remains to be seen if Calagaro's death was also related to precious metals rigging, although it certainly wouldn't be surprising. What is surprising is that slowly things are starting to fall apart at the one bank which, as we won't tire of highlighting, has a bigger pyramid of notional derivatives on its balance sheet than even J.P. Morgan, amounting to 20 times more than the GDP of Germany itself. So the bottom line here, fellas, is that there are important people at important banks that continue to die unexpectedly and in most horrific ways. And I think it's just further evidence that the Ponzi scheme is collapsing, and people that could possibly speak out against it in court are no longer alive to do so. Would you like me to continue on with these headlines, or should we talk about this a little bit?
Well, I think we can probably, you've probably given us enough to comment on. I think Deutsche Bank's results, there's some figures, I don't know whether it's quarter or half year or whatever, coming out, I think next week. And I saw another headline somewhere, I think it was probably in the FT, that they're going to write off $1 billion against fines and litigation costs and all the rest of it for fix rigging. The implication being it's not just gold and silver, but more LIBOR and foreign exchange dealing and so on and so forth. What's interesting, I think, is the timing that this lawyer, unfortunately, appears to have committed suicide just ahead of these results coming out. And also do remember that Deutsche Bank were called to account by BaFin, the German regulator, earlier this year. I think it was back in February. And Deutsche Bank were asked to hand over all their precious metals dealings records, at least this is what was reported, to BaFin. And coincidentally, shortly after that, Deutsche Bank withdrew from the silver fix. It put its gold fix seat up for sale. There were no takers, so it just said, right, well, we're resigning from that. So, it's very tempting for me to put one and one together and say I've got 5 as an answer. But it does sort of smell like it could brew up into something a bit more important. And I think that's about all we can say really at this stage without sort of getting into the realms of
speculation.
Speculate. Well, yeah, we're speculating already in a sense, but I think that's what we know. It just seems a bit odd that it's all these things seem to be coming together, as it were. So we might get a bit more news on the litigation front this week in conjunction with the write-offs. And we haven't heard anything about the BaFin inquiry at all. I mean, that's just gone very, very quiet. But I personally don't think it's over. I mean, the point about BaFin is that they only really report, I suppose, to the Bundesbank, but they are independent of the Bundesbank. The Bundesbank itself is no longer at the top table in the Bank for International Settlements, that place having been taken over by the ECB, which is just across the road in Frankfurt. So if you're sitting in the Bundesbank, you're sort of, you're out of it a bit. And if the man from ECB comes over and says, look, can you lean on these BaFin guys because their inquiries could turn out to be a bit embarrassing, I'm not sure that the Bundesbank would sort of really be keen to do it. And equally, I think to have the ECB lean on BaFin, I think BaFin would tell them to go and take a running jump. So it's quite an interesting thing that, unlike in the Bank of England, where the Financial Conduct Authority is part of the Bank of England and the bank has oversight for the gold market in London, therefore one could suspect that words in the right ear might defuse a potential problem, if I put it that way. I don't think the connection is quite so strong for that sort of state control or the implied state control in Germany. So it's going to be interesting. We need to watch this Deutsche Bank situation, I think. Just keep following it.
Yes, and I want to circle back and talk about this speculation. We speculate, were these people suicided or did they commit suicide? And one of the posters at SGT Report, Jeff, brought to our attention the CIA study of assassination document, which under point number 2 is accidents. I just want to read this to you, fellas. Quote, for secret assassination, either simple or chase, the contrived accident is the most effective technique. When successfully executed, it causes little excitement and is only casually investigated. The most efficient accident in simple assassination is a fall of 75 feet or more onto a hard surface. Elevator shafts, stairwells, unscreened windows, and bridges will serve. End quote. The CIA is certainly, and the Mossad, and other intelligence agencies around the world, the MI6, are certainly practiced in the art of assassination. So when high-profile, healthy young men die unexpectedly by, quote, suicide, and they had secrets that they can no longer share, dead men tell no tales, it is in the realm of speculation that is allowable and understandable that we would wonder what is happening to all of these bankers. But I have so many other headlines to cover. Rory, did you have any feelings on this, or did you want to cover a headline of your own before I read my litany of other hot headlines?
Well, I wanted to. There was an article that came out this morning or yesterday, and it's from the China Money Report, and it's by Dan Collins. And apparently there was an article that went viral in China, and the headline was something along the lines of gold going to $7,000. And it goes on to, it says that the media, it is going viral and one of the most viewed articles in the financial press. The article references American Jim Rickards and his concept of the comparing inflation-adjusted gold prices. Most Chinese economists think that the price of gold should be approximately 2,400 instead of the current 1,235. And Alasdair, what with your fiat quantity or money quantity, the FMQ?
Fiat money quantity.
And
yes,
with that calculation, would you tend to agree with that 2,400 announced that the Chinese believe that it should be, or do you think that it should be higher or lower, or do you think 1,235 is about right?
the purpose of FMQ isn't to sort of put a figure on the relationship between gold and the dollar. The purpose of it is to illustrate, if you like, relative values. Now, all I can say is that if you look at the quantity of fiat dollars in circulation, I mean, both as credit and money, and also held out of public circulation on the Fed's balance sheet, which is really what the whole thing is. This is an enormous figure. We haven't seen a quantity like this relative to the quantity of above ground stocks of gold, really, I suppose, since the year 2000, when the price of gold dipped below $300. And also the other time when it was when gold was cheaper relative to fiat money, the quantity of fiat money dollars was back in 1968, before the gold pool failed. So we're on the cheap end of things, and that's really the whole point of FMQ. The other thing I would say about FMQ is that unlike previous times, FMQ in the past was growing at a fairly constant sort of, I think it was about 5.6, 5.9% compound per annum. Ever since the Lehman crisis, of course, when they've been printing and money and trying to encourage the banks to expand credit and all the rest of it, FMQ has taken off. It's now hyperinflating. And you can see the consequence of this. As soon as there's a suggestion that one element of it slows down, like tapering, if we start tapering QE, you can see everybody beginning to get really worried as, is there going to be enough money to go round? Do interest rates have to go up? Do stocks have to go down because there's no more money to go in and buy it, sort of thing? You can see that people are beginning to suspect that there is a bit of a money squeeze just from tapering QE.
But don't these big criminal bank enterprises, don't they have a lot of money just sitting, on their screens?
Well, I mean, the answer is they can create it out of thin air. If you go along, Rory, and you can persuade them to lend you some money, I mean, how much do you want? And then they just write a check there, and that's it. Credit your account, bang. That doesn't actually exist until it goes into your account. I mean, it's just created out of thin air. Either they do it or the Fed does it. And the reason the Fed does QE is they're worried that the banks aren't doing it enough. Rory turns up at the bank and the bank says, go take a running jump. And that's no good as far as the Fed is concerned. The Fed wants the total quantity of money, fiat money, to continue to expand. Otherwise, they see a potential crisis. You've got bankrupt governments who need to have interest rates at the lowest possible level so they can continue to finance either printed or borrowed, and if it's borrowed, the credit is printed to create the money, as it were, for the government to borrow. you know, at 2%, yeah, that's fine. That's brilliant. If it goes to 3%, then we got a problem, because at 3%, suddenly you've got, the government's going to have to pay more, which government doesn't like, and central banks don't like to see governments having to pay more because it upsets everything. And the other problem, of course, is that if you suddenly see 3-4% yields, we're going to have real difficulties in the banking sector, because guess who's long of all this stuff? The banks. And particularly in the Eurozone. Believe you me, it's not going to take very much of a rise in bond yields to wipe out the equity element in a bank's balance sheet. We were talking about Deutsche Bank. I mean, quite simply, Deutsche Bank's balance sheet is geared over 50 times its equity x goodwill. Mm-hmm. That's a balance sheet ratio. I mean, mm-hmm. So in other words, 2% fall in the value of its assets, and it wipes out its equity. So I mean, this is why I think banks like Deutsche Bank should be watched.
Gentlemen, if you don't mind, I want to read just a few more of these headlines here, because as we get into the weeds of the bond market and the bank balance sheets, I think it needs to be said that some really amazing news has come out this week, and I didn't get a chance to share those headlines. So if we could just circle back, I want to read these to you. Our friend Dave Kranzler from Investment Research Dynamics reports that the GLD has been drained again. 33% of JP Morgan's COMEX gold has been drained. And then coming from SRS Rocco's Chris Hamilton, a great article explaining how China could now easily have a 10,000-ton gold reserve right now. And how does he explain that? He says that from 2000 to 2011, China had on average recycled 50% of its trade surplus dollar reserves into treasuries, U.S. treasuries. However, as we all know, China became a net seller of treasuries in August 2011. Why is that date important? Because it was the month after the debt ceiling fiasco and the date when China's purported gold purchase binge began. He doesn't think it's a coincidence. Now, he says if China rotated the 50% of surplus dollars that it had been utilizing to buy treasuries and instead bought gold at an average of $1,500 an ounce since 2011, that would buy China exactly 10,000 tons of gold by year-end 2014. Why am I bringing this up in the middle of our interesting conversation? And I didn't mean to interrupt you at all, Alasdair. I'm bringing it up because all of the banks we just talked about have no gold. They've leased out all their gold. Their vaults are empty. Everybody knows it. The world knows it. China knows it. Russia knows it. Putin knows it. So why are we seeing all these banker suicides? Why are we seeing panic within the Western banking system? I think it's precisely because the gold is moving east, as we've long discussed, and the West is terrified that the Ponzi scheme is collapsing. What do you make, Alasdair, of this estimation that China could be sitting on a 10,000-ton gold reserve easily right now?
Wildly underestimated.
Powerful.
Let me tell you why. I actually wrote an article for Chris Martinson's Peak Prosperity on gold. The first part, he likes to. They have two parters. So the first part is in the public domain, and the second part, is for subscribers. But the bit that I put in the public domain included some figures. Going back to 1983. Now, the reason 1983 is important is that is the year that the communist government in China delegated all handling of gold and silver to the People's Bank of China. That was the date of the original regulations. And the original regulations set out how the People's Bank of China were charged with controlling the market. Now, if you think back to that time, there was quite a lot of gold around. It was being released by a bear market because it had peaked in 1980. There were official sales by central banks going on at that time. Leasing had started. And not only that, but with heap leach processing, gold production went up very, very significantly in that period because they were able to release lower grades. So you had a combination of things happening to create supply. Now, there were two buyers in that market at that time, of which we are aware. One was the Middle East, the OPEC guys who, from the mid 1970s onwards, suddenly had huge amounts of petrodollars, which they needed to do something with. Now, most of it obviously ended up sort of on deposit. Some of it went into gold. The Swiss bankers, according to Ferdinand Lips, were recommending the Arabs to put at least 10% and up to 40% in gold. The quantity of gold being made available in the 1970s wasn't sufficient, if you like, to go with that. So you had the Arabs. The other big buyer was, of course, India, because the Gold Control Act was rescinded back in 1990. There was a financial crisis. The old Gandhi socialism came to an end, and they embraced free markets. There was a complete change, if you like, in the way India had the relationship between government and its economy. And part of that was to liberate gold, because Indians were smuggling gold in anyway before the Gold Control Act was rescinded. The Gold Control Act comes in, and the total amount of gold actually that had been bought by India, and I think I made a note of it somewhere, was, this is between 1990 and 2002, was only 5,426 tons. Now that's interesting. Obviously since then, the quantity of gold imported increased, and I think in 2012, it was close to 1,000 tons in that year. But of the total amount of gold that was made available by a combination of sources, we can see that the Arabs bought a huge lot. We don't know how much, but the Indian lot. If you take the sort of 1990 to 2002, that was 5,500 tons in round figures. So if you go back to 1983, between 1983 and 1990, there's probably about 2,000 tons smuggled in. So there's only about 7,500 tons from that. Now that leaves, by my calculations, a total of 68,424 tons unaccounted for. That was between the Middle East and other buyers. Now, the other buyer at that time, and remember the date 1983, which was when China basically set herself up so she could go and buy gold in the gold market. China must have been the other buyer. And that is why I think that if you look at the total supply of gold, if you look at how much India actually took, and those are official figures, by the way. Obviously, pre-1990, that's if you like a smuggled estimate, but I don't think it's too far off. You've got official sales by central banks of 4,856 tons. You've got estimated leasing, in other words, gold that was released from central bank ownership. And this was an estimate produced by Frank Veneroso, which he made public in a speech in Chile in 2002. He estimated that between 12 and 16,000 tons were leased at that point. So this is another 14,000 tons, taking the medium level. Mine production was 41,994 tons. Now, on top of that, you've got Western net portfolio divestment. What I mean by that is that we had a bear market, and over that period, we moved from people in the West being, sort of thinking, well, you should have 10% gold in your portfolio. Usually it was in the form of shares in mines, by the way, but that was the sort of approach. But then with the bear market, obviously everybody in the West, for investment purposes, was selling it down. And not only that, but if you go back to Ferdinand Lips's gold wars, he states quite clearly that towards the end of that period, there was a new generation of portfolio manager in the private banks in Switzerland, and they were basically selling all the gold that their clients had, because these guys, they were trained in, the dot-com bubble was coming, and put your money into equities, don't have it in gold. Gold is a sterile. In other words, they'd been to Harvard and had a Keynesian bath.
Yeah, they listened to Warren Buffett. Gold is
exactly.
Gold is a non-producing barbarous relic. We get
exactly.
it. Yep.
Exactly. You got it. Anyway, so if you total all that up, the total amount of gold that had to be absorbed in the market was 75,000 tons, or 75,850 tons by my calculation.
Sure.
So where did it go?
Yeah.
That's the question. Now, I come back to China tasked the People's Bank to go out and manage its gold acquisition program in 1983. Now, this leads me to suppose, and I think it's perfectly reasonable to suppose, that something like 20,000 tons was acquired by the People's Bank of China in that period. Mm-hmm. Now, that would leave the Arab community having something over 40,000 tons, which I would think is probably about right. I mean, I don't know how much gold the Arabs bought. I mean, I know that they had an awful lot of dollars, from not only oil but also gas. I did work it out once for an earlier article. I can't remember what the totals were, but you're looking like sort of $3 or $4 trillion
sure.
Earned, and this is very, very big money. So, I think it's reasonable to suggest that the Arabs probably bought about 40,000 tons. Now that still leaves 20,000 tons
Sure.
minimum. I think it's ended up in China's hands. So I'm not, and that I think was pre 2002-3. The reason 2002 is important is that was the founding of Shanghai Gold Exchange. Mm-hmm. Now, the reason the Shanghai Gold Exchange was founded, I guess, was that the authorities in Beijing were happy with the quantity of gold they had tucked under their belt. Didn't mean to say they were going to stop buying, but it meant that they could then, for various other purposes, allow the private citizen to acquire gold as well. These Chinese leaders are looking beyond the day when their main export market is, say, Western Europe and America. And the more time goes on, the more convinced I am that their exit plan, if you like, from depending on America and Europe, is to develop the domestic Asian market. And by Asia, I mean everything from the gates of Jerusalem to Vladivostok. And so, or the Bering Straits, if you like. And they've already assembled this with the Shanghai Cooperation Organization. And the two major players in this are Russia and China. And guess what? Russia's got the resources, China has got the manufacturing. So you can see that these are two countries, ex-communist countries, who are now made for each other, if you like, in some sort of symbiotic relationship. As well as that, China is now pretty well colonized virtually all sub-Saharan Africa, and they're taking gold doré from Africa, taking it back to China. All the refineries there are owned by the government, is refined by the government, and do we ever see any of these bars in the West? No. Which tells me quite clearly that the gold that the Chinese government refines, it keeps for itself.
Let me just interject and summarize just briefly. You mentioned that Russia has the resources, China has the manufacturing. They've joined forces economically to align themselves against the aggression of the Pentagon and the U.S. government. Meanwhile, here in the United States, our GDP is essentially now a 72% service-based economy. It's an economy that's really in shambles. As Michael Snyder has noted recently, 50% of the salaries, 50% of the earners in this country make $28,000 a year or less. This is not the economic powerhouse it once was, and the Western banks have only fiat as the East has gold. Now, back of the envelope math suggests, based on what you've just said, Alasdair, China could have had 20,000 tons of gold. And Chris Hamilton was noting just since 2011, by not putting money into treasuries, they could have amassed at least another 10,000 tons of gold. And that's to say nothing of the gold they mine themselves annually. What we are talking about, what is shaping up here for those of us who are paying attention and documenting this collapse, is more than a shift of power from east to west. It is the absolute implosion of the West. And that is why I think we see these endless wars and saber rattling. As Max Kaiser just noted in an interview that I thought was one of the best quotes I've heard in a long time. Max Kaiser noted recently in an interview that the U.S. dollar is back. It's backed by violence. The U.S. dollar, his quote, is backed by violence. And I think that sums it up quite well. And against all of this, against the backdrop of everything we've discussed in this interview so far today, Alasdair and Rory, against all of these hot headlines, we have the Swiss gold referendum vote coming up on November 30th, and that potentially is another seismic shift. Hey guys, that concludes the first half of my interview with Alasdair Macleod. So stay tuned, the second half will be posting in the next couple of days. Thanks for visiting us at sgtreport.com. We appreciate your support. Have an excellent week.